Very few people in the world talk about this. Very few people in the world know about what this is, and very few people in the world have the guts to do it. What helped me very much understand the markets and the psychology of the markets is I have two special needs children. My first son was born in 1991, who's mentally disabled, and I had to learn how to work with him and what he was thinking and reacting to in his environment. That helped me understand what moves markets. The Federal Reserve should be abolished. It doesn't belong in our system. It's dislocating every market. It's hurting everybody in the world, and all the central banks are doing that. But again, that's another conversation for another conference. Traditional investments. You have long-only, you have equities, long-only equity funds, long-only bonds, and long-only bond funds. I talk about this in the radio show. This is what we're trained for. Yeah, the last 25 years, anybody's a genius. Okay, what's going to happen when that turns? The markets have been around for over 200 years here in the United States and 400 plus years over in Europe. What's going to happen if you're long-only stocks and long-only bonds? Eventually, interest rates are going to go up, and eventually stocks cycle. So what do you do? Now, are you really diversified? If you're in these funds and you're long-only the market, you have small cap, mid cap, large cap, got emerging markets, sector funds, and people come to me, oh, I'm completely diversified. I said, you're not diversified. You're in the equity market. That's one place to be. This is diversification. Are we in the early stages of a potential deflationary depression? By all of my indicators that I follow and all of my proprietary analysis, my systems are signaling to me that the worst is yet to come. I'm not trying to scare you. I'm going to explain it as we go through this. But we just haven't seen the biggest washout that is due in the 40-year cycle. Said, don't buy gasoline this week because next week it's going to be lower. He's actually encouraging people not to spend money. This is now the cycle. Everything cycles. The world cycles. The moon cycles. The ocean cycle. The solar system cycles. Markets and economies also cycle. By the way, in my book, I do discuss ancient Rome, ancient Greece, and ancient Egypt, which is very similar to what we're going through now with the ancient Egypt was a crop issue. Ancient Rome was a philosophical issue of how to structure and protect the civilization. And ancient Greece was the narcissism. Narcissism brought down ancient Greece. I wrote that in my book. We're entering all three of these pieces at the same time based on my indicators. How many of you were around in 1973 and 1974 and in the market? Okay, few of you. It was painful. Okay, this was Nixon resigned in August 1974, Watergate scandal. The market peaked. Everybody thought it was going to keep going and keep going. From January 1st, 1973, or January 1973, to December 1974, the Dow Jones dropped 50%. 50%. We had the oil issues, we had the government issues. There were just so many things that were happening. But what really happened? Margins at companies started to contract. And when margins contract, what happens? The value of that company becomes less worth buying. And that's what the institutions look at, margin. Here is Japan. Now, Japan is way ahead of us. Even though you think they're behind us, they're way ahead. The Nikkei index in 1990 hit just about 40,000. Remember they bought Rockefeller Center at the peak? And they bought a building in Hawaii, on Oahu or something, at its peak. They were all over the United States buying. Look what happened to their index. All of a sudden, people stopped spending money. People got scared. This has been happening after their QE programs. What they just announced the other day was just an all-in poker game. They've been doing this program all along, and it still hasn't worked. Yeah, it's moved up to 17,000. A lot of people are excited about it, but look where it was, and look where it still is today. They haven't solved their problem yet. Now this has moved over to Europe, okay, because Japan has more debt to GDP than anybody. Now it's moved into the Eurozone, which is second place, and we're in third place. So it's just a matter of time before it cycles to our shores. This is the most important chart that shows the whole stock market. This is the value line geometric index. This takes into account all stocks. You see a pattern here? I call it the three little Indian pattern. You could trade this on a chart on other stocks. but we have a topping pattern that continues to exist. The value line has not broken through the 1998 level high. It came up, and now if you time this measurement out symmetrically, we're in a danger zone. So it's either going to break out, and I'm going to be totally wrong, or it's going to break down, and people are going to be crying. That's what's going on internally. You won't see this in the Wall Street Journal. You won't see this in the news. How many of you are trading crude oil? No? Okay. Good. Crude oil has been on my radar to collapse. When it was, if you've been listening to my radio show, 6 months ago I said it, when it was 100, 105, it was up in this area. I said crude oil is ready to crack. It's going to collapse. Why is it going to collapse? Well, look where the commercials were. This is the highest net short position in the history of the contract. I didn't put the open interest on here, which means how many contracts are outstanding, but it was huge. Those guys, they don't care where the price of oil goes. They're hedging. So what are they doing? They have oil in their tanks, and they're selling the futures markets to people like these guys, the hedge fund guys, who think oil's going to $150 or $200. They were net long. The public even got a little more excited. And what happened? Broke down, broke through a major, and I show you the multi-year trend charts because that's where the trends are. Don't look day to day, don't look month to month. Look at the overall trend, get into the trend and wait, it's like a bottle of wine. Wait for that trend to come to fruition. So I talk about buying a stock at 50, it goes to 40, our psychology says let's buy more, goes to 30, you hold what you have, goes to 20, you get the pain in your gut, and you finally sell it out and take the loss. And we do that so many times that when we have a profit, we buy another stock at 50 and it goes up to 60, what do? We sell it. We're a genius. We were right. It's just the opposite. What we're doing here is we're hoping our losses come back and we fear we're going to lose our profits. Change that thinking. Change it. Fear your losses. Hope your profits keep going. Get rid of the large losses. If you don't have large losses, then your small profits and small losses cancel each other out, leaving you with the large profitable trades, and that's what you're looking for. When you buy a stock at 50 and it goes to 60, it means you were right. You buy more. You don't sell it. When a stock goes to 40 and you bought it at 50, you sell it. You don't buy more. It's a training. It took me years to get this. I don't expect you to get this in 10 minutes. Okay, remember, investment is a business. Have a plan. Follow an entry and exit plan with rigid discipline. Survive to hang around for the big moves. That's what we're looking for, the big moves. Break-even levels have no bearing on the future success of your position. The market doesn't care where you bought or sold your stock. Big moves take time to develop. Stay patient. They could take 6 months. They could take a year. Nothing new ever occurs in the markets. History repeats itself over and over. Fear and greed move prices. Thank you.